Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamoan, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions.
This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their homeownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode.
Today, we're talking about a significant development in Ontario's housing landscape. The province has approved a plan to allow higher and denser buildings near transit stations in Toronto. This is a big move aimed at increasing housing supply in the city.
That's right, Steve. Ontario's Housing Minister, Rob Flack, announced that these changes to Toronto's official plan would allow for 1.5 million more homes over the next 25 years. It's a strategic approach to address the housing crisis by situating more homes near transit.
Exactly, Janine. The idea is to have more people living near transit to help ease gridlock on city streets. This could be a game changer for urban planning in Toronto, especially considering that previous plans only aimed for 500,000 additional homes.
Mayor Olivia Chow mentioned that the former mayor had submitted a similar plan 5 years ago, but this one triples that effort. However, it's important to note that these plans still need City Council approval before anything can move forward.
Right. And the plan focuses on increasing density and maximum building heights near 120 transit stations across the city. The province has also stated they'll continue working with Toronto on plans for 14 other transit station areas.
It seems like a comprehensive approach. But Steve, with the province already falling behind on its goal of building 1.5 million homes by 2031, is this enough to catch up? Last year, only 94,753 homes were started, including long-term care and student housing.
That's a valid concern, Janine. It's clear that while this is a step in the right direction, more aggressive measures might be needed to meet the ambitious targets. But it's encouraging to see the province taking steps to address the issue.
Absolutely, Steve. It's a positive step forward, and I think it shows a commitment to solving the housing supply problem. It'll be interesting to see how these plans unfold and the impact they'll have on the community and the real estate market.
Next up, we're shifting our focus to Newmarket, where there are some encouraging signs in the real estate market. Recent data from July suggests that sales are picking up and prices are dropping, which some local experts see as a positive indicator for the market's outlook.
That's good news for both buyers and sellers, Steve. According to the Toronto Regional Real Estate Board, Newmarket had the strongest real estate market in the Greater Toronto Area last month when measuring sales compared to active listings. With only 3.8 months of inventory, it's an indication that homes are moving, especially when priced correctly.
Exactly, Janine. The diversity of available housing stock in Newmarket seems to be a key factor here. In July, there were 91 property transactions, up from 84 in June. This uptick mirrors a wider trend across the Greater Toronto Area, suggesting a revival of sorts in the market.
While smaller detached homes under $1 million are performing well, condo sales are lagging a bit due to an influx of new properties. This has driven prices down because of the increased inventory. It's a classic case of supply and demand at play.
That's right. And Darcy Toombs, a local Coldwell Banker broker, pointed out that many properties are still overpriced, which is slowing down sales. Buyers are becoming increasingly wary of the pricing strategies some agents employ, where homes are initially priced low to invite multiple offers, hoping to sell above the asking price.
It's important for sellers to set realistic expectations. Even though prices for all property types have remained relatively stable, they have fallen in Newmarket from just over $1 million to $920,000. This represents a significant drop from last year.
The number of active listings has increased as well, giving buyers more options. In July, Newmarket had 373 active listings, up 41% year over year. This shift is expected to continue as sellers adjust their price expectations downward and move away from an investor-focused market.
Darcy Toombs believes that we'll see more people using homes as actual residences rather than investment properties. It's a shift that could bring stability and sustainability to the market, benefiting communities in the long run.
Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder, Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your homeownership goals. Catch you next time and stay informed with the latest industry insights.